The traditional banking system is struggling to keep up with the rapidly evolving financial landscape. Now, the rise of cryptocurrencies and decentralized finance has exposed many flaws and limitations of the current banking system, making it clear that significant upgrades are needed. However, rather than competing against Web3 projects, banks should explore the possibilities of adopting the new technology and potentially revolutionizing traditional banking. Now, one of the major complaints of customers when dealing with traditional banks is the issue of centralization. Banks hold the power to freeze customers' assets and stop transactions at their discretion, even when the funds are owned by the account holders. Now, this centralized control over individual assets remains a contentious issue, leaving customers with limited control over their own money. Cross-border payments have been a long-standing challenge in the traditional banking system, and depending on the countries involved and the payments platform used, transaction fees can be unreasonably high and transfers may take several days to complete. This lack of a seamless cross-border payment solution is frustrating, especially when there is an urgent need to send or receive funds across borders. Additionally, traditional banks operate within specific hours and are typically closed on weekends. During these downtime periods, customers are often left waiting for the banks to reopen to process their transactions. Now, something as important as a bank not providing 24/7 services should not be a thing. Fortunately, several independent projects have taken the matter into their own hands and are actively working to address these issues. For instance, Ripple Labs introduced XRP, a cryptocurrency designed for efficient cross-border payments. XRP offers near instantaneous transactions at minimal fees, providing a way for individuals to send funds anywhere in the world without the involvement of intermediaries. Meld is another notable platform that simplifies the borrowing and lending process. Traditional banks have long been associated with the tedious and time-consuming loan application processes. Meld, as the world's first non-custodial borrowing and lending platform, streamlines these processes, offering a more accessible and efficient alternative. Similarly, Aave is a decentralized lending and borrowing protocol that enables lenders to earn interest by depositing cryptocurrencies into liquidity pools. Borrowers can use their digital assets as collateral, and the lending and borrowing processes are facilitated through smart contracts. Now, when it comes to the overall functionality, these DeFi platforms aren't better than the banks, but they are better at specific areas they're designed for. It's essential to acknowledge that both traditional banks and DeFi platforms have their own sets of advantages and disadvantages. Traditional banks are highly regulated, which provides a level of user protection. However, DeFi platforms operate in a more decentralized and open environment. It allows them to offer faster and more cost-effective solutions for specific financial needs. The primary objective of Web3 finance platforms is to reduce or eliminate the need for traditional financial institutions to govern financial services. However, if they can coexist and banks integrate this new technology, a financial revolution could be in the making. Web3 technology uses a distributed ledger system that ensures the encryption of transaction details without relying on intermediaries. This technology can be adapted and utilized by traditional banks to enhance transparency. With this technology, users involved in a financial transaction can access and trace the movement of assets, ensuring a higher level of transparency. The integration of blockchain technology, which is at the core of the Web3 movement, could be the key to the future of banking. Many countries are currently exploring the launch of their own central bank digital currencies, which opens up new possibilities. CBDCs can leverage blockchain technology, allowing users to have self-custody of their own assets using their own wallets. This transition could mark a significant step forward in the world of finance, although its realization depends on individual countries' decisions. If traditional banks choose to collaborate with blockchain technology and Web3 platforms, smart contracts could transform the landscape of traditional finance. Smart contracts have the potential to automate various processes, making them more efficient and customer-centric. For instance, loan applications, approvals, and repayments could be fully automated, allowing borrowers and lenders to define the terms and conditions in a contract. Once predefined conditions are met, the smart contracts would execute, dispersing funds or initiating repayments without the need for intermediaries. Moreover, smart contracts could enhance KYC processes, and that provides a secure and efficient way to verify and manage customer identities. This will significantly improve the onboarding process and ensure data privacy by giving customers more control over their personal information. And smart contracts can also serve as digital escrows, holding assets or funds until predefined conditions are met. This feature is invaluable for various financial transactions, including real estate, purchases, mergers and acquisitions, and online marketplace transactions. The automation of these processes reduces the risk of errors and disputes, making transactions smoother and more secure. The technology is already there, and all it needs is some fine-tuning to make it more compatible with traditional banks and align with the regulations. By embracing blockchain technology, smart contracts, and Web3 principles, traditional banks can enhance their efficiency, security, and customer experience, marking the beginning of a new era in the world of finance. This is just the tip of the iceberg, and the possibilities really are endless with Web3. Let me know in the comments what other ways Web3 can change traditional banking. And if you found this video informative, make sure to hit that like button and subscribe for more. Thanks for watching.